We're going to get rolling in here today, and with these markets recently here, a week ago we went down to support, and now we're backing, ran back up to resistance, and then today we're a little bit lower. And what we really want to go through today is just give you, the bullish and the bearish side of the markets in here right now. I mean, this is a market, especially on the grain side, that is extremely divided, and we want to take a fair and balanced approach to what we believe is going on. So, here we go. We're going to give you both sides of this thing. And, to me, there's a number of things that are the key points. It's yield, it's outside markets, what's going on in the world, and then the potential demand. So as we swing over to the yield side of it, the USDA currently has a corn yield in place of 176.3 and a September bean yield at 50.6. As we visit with producers as a whole, our bias is that if this corn yield is correct at 176.3, the bean yield is probably a little bit too high and that needs to be dropped down. On the other hand, if the bean yield is correct at 50.6 or the bean crop gets bigger, we think this corn crop has got to even increase a little bit higher. The thing to remember as we look ahead to the October supply demand report is that if yields grow from September, in all likelihood, they'll probably grow into the January crop report as well. Now, this is a dilemma that we face on yields as we visit with producers, and these are calls within an hour. We've got a producer up in the northern plains that is harvesting beans, and the yields are single digits, okay? And then we can also visit with a producer through the central portion of the Corn Belt in Illinois, and they're getting triple digit on beans. Probably one of the comments that stick with me here over the last couple of days was a producer in North Dakota says, yes, we've got beans in the teens. The problem is it's my yield. So when you look at this yield side of it, you can really find whatever you are looking for. Now, as we flip over to the outside markets, the bullish argument on the outside markets is crude oil. As you can see by this chart, crude oil has had a good rally back up. The high where this red line is at is October of 2018, which is at 76.90. Today's high is 76.67. You can see if we break above this level, everyone is talking about crude oil heading up to the 90 to the 110 range and where we traded at in 2013, 2014. So if you're bullish of grain markets on inflation, this is a chart that you're leaning heavily on, that energy prices are going to take us higher. Another energy market that's getting all the focus is natural gas. Natural gas has had a breakout here in the last couple of weeks, and as you can see by the chart in front of us, right when we got above the 2018 high at 492, the next discussion was targeting the 2014 high, which is 649. We neared that level in here today. Again, this is another market in here right now that the inflation bulls are really looking towards. Now, if we get above 650, where can we run to on the natural gas side of it? Keep this in mind. In 2008, the high was 1370. And the all-time high in natural gas futures occurred in December of 2005 at 1578. That's more than double where prices are currently sitting at right now. Again, if you're a bull in the market and you're bullish on all this inflation talk, you're really going to look at this crude oil natural gas markets. On the other hand, the bears in the market are pointing towards a market like silver. As you can see by the horizontal line I have on the chart here at 22 cents, silver is right down to that support level. If we take that support level out, you can argue that we're going to get silver to trade down to 16 to 18 cents. Another market that we think is fairly negative, and we highlighted this last week, is iron ore prices in Southeast Asia. As you can see, the chart in front of us, and it goes back 5 years, we've had iron ore prices drop about 50% of their value in the last 2 to 3 months and are getting back to the levels on where they were in the summer and fall of 2020. So when we look at a silver chart, we look at an iron ore chart in here right now, we would have to say inflation isn't a concern and that prices could roll lower. Again, there's strong bullish arguments and there's strong bearish arguments when you look at the outside markets. Now, if we just get back to the world markets and take a look at corn, I just want to show you two charts in front of us here. The top one is a Chinese corn futures. The bottom one is U.S. corn futures. that red line goes back to December 15th of 2020. And as you can see by the charts in front of us, Chinese corn futures are just below the December 15 level, where on the other hand, U.S. corn futures are about $1 above. Now we want to look at these numbers a little bit closely, and what we brought down here is corn futures where the prices were at the end of the month over the past year, and these figures are in US dollars. So if we just look at this top here, we had Chinese futures at 10.09, US futures at 3.99, a difference of $6.10 a bushel. If you go look at February of 2021, we had Chinese futures make their monthly high at that point of 11.21. US futures were at 5.56, a difference of 5.65 a bushel. When you had a difference of more than $5 a bushel between US futures and Chinese futures, we saw strong Chinese buying interest of US corn. That's a fact on what has happened. Now, when you get back towards the more recent months, you're noticing the spread between US corn futures and Chinese futures really narrow up into the 3 to 4.50, 4.60 range. And with that, our exports have slowed down. It is bothersome to us that Chinese futures traded to its lowest level in a year, yet you still have corn sitting here at 5.35 a bushel. Now it comes down to the export side of it, and what are we seeing? And so this last week, or every week, they put on there what our export sales commitments are on a year-to-date basis. Now you need to keep in mind these are sales figures, these are not shipments. So the shipments were affected by the hurricane, but sales are not. And when you look at the figures in front of us, you can see the wheat export sales pace so far this year is 396 million bushels. A year ago it was 495. We're behind last year's pace by 100 million bushels. Now keep in mind the current USDA report is saying yearly exports are going to drop by 115 million bushels. So we'd have to say when you look at these numbers that wheat is on pace to match the decline that the USDA is forecasting. As we look to the corn numbers, you can see corn export sales on a year-to-date basis are 982 million bushels. A year ago, they were around 890. We're almost 100 million bushels ahead of last year's pace on corn. And the USDA, though, is saying that our exports are going to be down 270 million bushels from last year. We need to keep in mind that some of this Chinese buying was front-loaded from this past spring, okay? But that the pace is so far ahead of last year, yet the USDA is saying it is going to be lower, needs to be monitored. This is a potential bullish indication on corn if these exports stay strong, that the USDA will have to bump up demand. But if our exports start tailing off towards the end of the year compared to what it was as a year ago, it could become more in line. But just looking at these figures right now, you'd have to say corn gives you some hope. On the other hand, when we look over at the bean side of it, you can see with the figures in front of us that bean export sales are almost 450 million bushels behind last year's pace at around 850 million compared to 1.3 billion a year ago. At the same time, the USDA is saying that our annual export sales are only going to drop off 170 million bushels. We have had some daily announcements. We have had some decent export sales recently, but this thing really needs to kick it in gear. And we need to remember that Brazil is currently planting their crop. Now, we're going to finish this thing up, okay? And this is what it comes down to, is whether if you're bullish or bearish in the market, you can really spin this thing however you want, okay? I mean, you can spin yield, you can spin outside markets, you can spin exports. You can spin this thing however you want. And I think that's what has really led to this market being more or less two-sided here over the last 3 or 4 months. We are convinced we will break out it here at some point, and what it comes down to is you need to place your bets or take your risks on what can occur. This is what it comes down to for us is, you got to decide what makes you happy, okay? And the reason why we like making sales in here right now is that we look at current yields in a lot of situations, and you look at current prices, that we can get a very good return on our investment here this past year. And so that's where we like making our sales. The other thing we ask ourselves, and I'm just going to use March corn as an example. March corn's right around 5.40 a bushel. If I sell my corn today at 5.40, and it's a wrong thing to do because corn went to $6, okay? Yes, I might have sold this year's crop too low, but I can sell next year's crop at a much higher price and will have improved opportunities down the road. On the other hand, if I look ahead to March and we have corn futures down at 475 or 480 a bushel, and I decide to hold on to the inventory, not only am I giving up excellent profit opportunities for 2021, but looking ahead to 2022, things are going to tighten up in a hurry. I have at the end and what makes you happy, and I've got to tell you, on every day and coming to the office and visiting with producers, I have to say life is good, and when I go home, man, life is good. But then I have to admit, when I turn on the news, or I got to focus on some of the news that's affecting in the markets, I just think that there's a lot of odd stuff or really weird stuff that's going on out there, and where we're sitting at, especially for grain producers, where you have excellent profit opportunities right now. We just think with so many weird things going on in the world, it's not a bad thing to do. Take some money off the table and say, you know what, life is good this way. I know it's not very let's say analytical on saying, hey, this just makes you happy, so make a sale. And you can argue both sides of these markets, but this is what it comes down to: is we just want to have a good bottom line protected in here for this last year, and say, what, we can live with the consequences of this market moving either direction. We're going to wrap this thing up in here now. The one thing I do want to mention is we're going to have another webinar in here tomorrow. We've had quite a few emails and calls in here about the margin protection insurance. We know the sign of us coming in here at the end of September, and Craig's going to be in here, who does our insurance, and going to go through some things with you on the positives and the negatives of it, and what we think as well. If you have any other suggestions for webinars, feel free to let us know. Have a great day.